Yeah, I expect a lot more downgrades this year in May and June. Given the second half of the year, financial year, was expected to pick up, and we've seen a real slowdown in consumer activity since the election was called, and pre that, when Malcolm Turnbull was talking about a double dissolution, we saw some softness in the consumer. So I'm really concerned about retail names such as Myer, Premier, and to sort of channel check to see how they're going. I mean, investors can look into shops and see if they're on discount. We've started to walk around a few of the shops in Sydney and saw some shops are on 30-40% discount on entire stock on the floor. So, I mean, this is a real worrying concern for us that they're going on discount already later in the year, where they normally do their end of financial year sales. So discounting early is a big trigger for us for a soft retail environment. Yeah, still like the telco sector, so stocks like TPG and Vocus I think have real potential. Granted, they've done acquisitions recently, so they have a few natural momentum indicators for the business through synergies, but telco industry is really strong still, so I think those stocks are fine. Telstra, obviously, very defensive characteristics, look like they're doing another buyback, $1.5 billion. They have a lot of potential for acquisitions as well, with a big war chest of cash coming from the NBN. So granted, their business is fairly mature, so it's not a growth story, but they have optionality around that cash. So I think those telco stocks look pretty good at the moment.